first of all, thanks for coming. Thanks for making. I know this is like a busy week for everyone. So
Pretty crazy, yeah.
yeah, having you here. Actually, for me personally, it's a great chance to get as well because every time when we talk, I just, so many insights. So I can promise you guys there are going to be a lot of insights as well. So yeah, before we start, I actually want to ask a couple of questions to people who are here. So I just want to understand who is our audience today. Just maybe, yeah, maybe they will have also some questions in the end. So maybe if you have time, we will let you speak as well. But first, who is a founder here? Just raise your hand if you're a founder. Okay.
Woo! Very good.
Who is fellow investor here? Okay, not very many. Who is just like, I don't know, builder? No, I mean by builder, like you actually write code or or like do tech stuff. Okay, who is just like BD guy, just hanging around? Who is here for drinks and food? Okay. Not too many. Okay. Yeah, jokes aside, thanks for coming. Yeah, and again, this is just a fireside chat. Just want to talk more about Animoca actually, and what you guys do. Obviously, I know a lot about what you guys are doing because we're good partners with Animoca, I mean, as Ton in general for like years already. But maybe you can briefly say a couple words about what is Animoca today for anyone who does not know what Animoca is now.
Sure. Thank you for this, and it's a great opportunity. Love the fact that almost everyone here is a founder of some sort, which is beautiful. So first, yeah, I'm co-founder of Animoca Brands. We're a business that is known originally for gaming before we went even to Web3 gaming back in 2011, and it's kind of apropos only because today, actually yesterday, a judge basically just ordered Apple to basically open up their payment rails and actually said that Apple was in contempt of court, and so it forced them to open up the App Store. And this is a milestone event, and actually somewhat special for me, only because I haven't written about this yet, because in 2012, we were one of the biggest App Store game companies in the world. For those of you who remember, we used to scroll, there was a ranking, like, in the App Store. We were 12 out of the top 20 in January 2012. And then Apple clicked the button and removed all of our apps. And this happens all the time, right? Because there's a big centralized platform that basically doesn't like what you do, doesn't know you, basically acts like a king and removes you. And it's been a long time, but I think it's time for these large platforms to sort of either behave or go away, and we kind of see what's happening with the App Store. So this goes a little bit to the background, Animoca Brands. We started as a game company. We got the platform from the App Store, had to go to a more open system like Android, struggled our way back as a gaming business, and then started this early, actually our studio helped build this little early NFT game called CryptoKitties. This was 2017. And it was because of CryptoKitties that we really realized the potential of what digital property rights was and became our mission. But, and I think this is the ethos of Animoca Brands, what we realized was in order to build an ecosystem that didn't exist, because NFT as a term is maybe 5 or 6 years old, right? That was when people talked about ICOs, right? The Bitcoin was coming up, when it hit $10,000, everyone was like, whoa, $10,000, right? And we weren't really in that space. But what we discovered was in order to build the ecosystem, we can't do it ourselves. Kind of similar to what happens in Ton ecosystem. So what did we do? We invested in all the companies that could help make this happen. And in 2018, as a relatively small company, we acquired the Sandbox, we invested in Axie Infinity, in OpenSea, seeded all those platforms, which was really, some people like, I like to say, oh, we found these companies, they were great. But no, there are only a few of them, right? We had a conference, it was an NFT conference, the first one in Hong Kong. I think it was the first NFT conference ever. The room was half empty, right? It was like maybe 50 people in the room. We were all believers, desperate to believe that NFTs would be the future. And so we basically invested in all of them. Because if anyone was building in an environment like this, then you're a true believer. So we either die together or we win together. And that was really the beginning of it, because we really believed that digital property rights and NFTs and blockchain would change the world of gaming. But we didn't know how it would change. But this belief that we would build an ecosystem together was part of that, because of the fact that blockchain was open and permissionless. And then, today we have 573 portfolio companies. and we are probably one of the largest, if not the largest, Web3 investor in general, including in big supporters of the Ton ecosystem. And we have a business that is designed around helping and supporting ecosystems, publishing games and apps and also applications, not just games, but 165 of them are in the gaming space. And maybe before we go into something else, I want to sort of talk a little bit about why we invest the way that we do. Because some people are critical. They're like, are you just spray and pray? Are you just hoping it's going to do well? Why are you investing in so many companies? So the philosophy we have is that we think we want to build a sustainable business. And we don't believe that companies like Apple or Google or Facebook are building sustainable businesses. Don't get me wrong, they're making profit. But when Apple lost against Epic, when they were given the judgment against them, nobody was saying, poor Apple. Nobody was standing up defending for them. Not a single person. But how many people buy an iPhone? How many people make apps on the App Store? I mean, so many. Why wasn't there a single company out there saying, actually, Apple's a good guy. We should support them. Pay the 30%. We should use their payment system. Because they extract. That's what's not sustainable, right? They take, they take, they take. If Apple took 1% of their cash, which is about 3 billion, because they have 300 billion sitting in Ireland, or something like that, it would become the largest seed fund. And if they developed and actually funded all of the apps, like anyone building on the App Store, a young entrepreneur with a good idea, they would fund thousands of companies. It would make a better App Store. It would make a healthy ecosystem. Young entrepreneurs have hope and opportunity, all that stuff. And I guarantee you, most of them will be happy to pay 30%. Because it's a tax. And when you pay a tax, there's something that goes into the ecosystem. We're happy to pay, we're in Dubai, so tax is low, I get it. However, where we live, we tend to be okay to pay a tax because we get infrastructure, we get support, we get an ecosystem, we have schools, whatever, something to support it. And if you know that the tax that's going to Apple will go into building new companies that bring new customers, which gives us new business and all that stuff, we would have no problem paying 30%. So it's a perfect example. So unless Apple changes their business practice, they will eventually go away, not because they don't have a affordable or not an appealing product, but because people don't like what they do and it's extractive. And we see this cycle all the time. I mean, even oil and gas companies have to be green now, right? And have to be sustainable. Over time, they have to look at something that makes it sustainable. And so when we reinvest back in the ecosystem, we make profit. Sure, we work with companies, we make investments. But the difference about us is that we put back in. More than half of what we make always goes back in investing. That's how we fund the ecosystem, right? And that's how we grow the space. And if every company in the world took a portion of their profit and reinvested it into startups, into entrepreneurs, and all that stuff, I think the world will be a very different place. And it's very easily affordable. I mean, you take 1% of the cash of the top 10 companies in the world, which is $1 trillion of cash, and you solve all sorts of problems. Because then you fund entrepreneurs, they give employment, and that's what we do. And like the 573 companies we invested in, not all of them will be super successful, sure, but they employ thousands and thousands of people in the space who bring joy to millions of customers, right? And that's basically how you build a sustainable ecosystem. So in the future, we hope to have thousands of portfolios. And essentially, the more profit we make, the more we contribute. And I also think that as the Web3 ethos, because all of you founders, you probably, when you make an exit, you will probably invest in other companies, right? And to me, that's the secret of places like Silicon Valley. It's the fact that people come and bring back. So that's kind of why we built Animoca Brands the way that it is. We're still evolving as a business, we're still growing, but the point is that we want to build in the ecosystem, and we think that's the best way to do it.
Amazing. As always, just one question and so many insights and so many things to think about. But actually, my question is about you guys. You invest in many verticals, right? Not only gaming, but you started with gaming. And I wonder what's your stance on gaming now? What do you think about it, especially obviously Web3 gaming? Because I'm a big fan of anything related to games as well, so I have to ask this question. So what do you think about it?
Of course, and it's a big part of our DNA. So let me first start with our mission is delivering digital property rights. We think that's the foundation in which we create a better world, because if we have digital property, it's not just Bitcoin, then we have access to capital, financial literacy, all that type of stuff. And that means that we have to invest in every business that can help grow that space, including Ton, right? I mean, you could say, why are we investing in Ton? Because you help grow the ecosystem. And of course, a lot of games use you for distribution. Now, gaming. So just for some numbers in Web3. At the end of 2024, gaming was almost 7 million daily active users on-chain. That makes it the single largest utility for on-chain activity. Not talking about trading and value, but in terms of activity. So gaming is number one. And so we believe that's going to continue. And with the help of what's happening with Ton and Telegram, we're going to keep that growing. And maybe now Apple has to open up too eventually. They still don't allow NFTs, but it will happen. And then essentially all of that stuff I think will break open.
The news you just mentioned, we discussed it so much yesterday about like how Ton and Telegram actually can benefit from this
absolutely
decisions. So
I mean I think some of the stuff that you guys are doing with stars and everything actually is the workaround. And because of
Telegram
Apple
had
Store
to
rules.
do that.
Exactly.
Yes.
And now we can just use Ton.
Exactly.
And use payment rails. I mean, and this is true for everything. So it's going to completely open up that. And I think the next ruling is going to be these things like around anti-competitive practices around, can you actually do an app store inside an app store, right? Because that's another rule that Apple doesn't like. But it's all about monopolies, and these need to be broken up. So this, to me, is just the beginning. And absolutely, these are incredible crypto rails. So I think this is actually a great day for the growth of our industry. But let's talk about gaming. And before we go into gaming, I also need to talk about sort of how we think of tokens, because gaming was big and growing, but why did gaming tokens not do so well? And what we've come to learn is that the people who buy tokens aren't necessarily the people who play games, right? And I think all of us in the industry who play Web3 gaming have come to understand that. But they're still members of the ecosystem. And what we also learned is that people who buy tokens are actually investor types who are reflecting sentiment in the market, meaning that tokens are reflections of market pricing and market indicators, much like commodities and stock prices. So in other words, if there's a trend, you see it in the market, and there's pricing and information, and it gives you signals. Where is the attention? What is important? What is the world talking about? Whether it's 5 minutes or whether it's 5 months, doesn't really matter. So the example I often give, which is true, I became cool with my kids for a short period of time because I was able to talk about Chill Guy. And it was like, oh, yeah, well, you know about Chill Guy. Well, it's kind of, because I'm not on TikTok. But why did I know about Chill Guy? Because last year there was a meme coin called Chill Guy, and it just went up. And that gave me pricing market information about what the world was thinking of. So tokens are kind of like an open poly market. They're not just it's not just a bet you're taking. They give you information, right? If Tesla stock is up, you can get some information around that, right? If oil companies are up, you kind of have an idea of what's going on in the market, right? So these are all forms of information. When Meta renamed itself to Facebook and it was COVID, all gaming tokens, not just gaming stocks and metaverse, was up. I mean, Sand token at one point was $27 billion market cap, right? Which was kind of crazy. Still doing well, but in comparison, right? So what happened in gaming? And this is why I sort of talking about the token side. Most people, actually, maybe I do a poll. How many people here think the gaming industry was growing in the last 3 years? Macro, not just in. Interesting. Okay. Gaming was declining.
Yeah.
And
after the COVID.
Yes, after COVID. And that's interesting, right? Because most of the investor type would think the same thing. After COVID, gaming will grow, right? We're going to be more online, right? The opposite. Right? It actually slightly declined. More importantly, though, the places where gaming was big, America, Japan, Korea, even China, or Europe, less babies, right? So that means less growth, right? The reason here in this region you don't feel it is because you have a young population. You have young people, so gaming is growing for a reason here. You have a younger population that's emerging. But if you look at Japan, the birth cycle is completely upside down, right? In fact, I think the forecast is that in, I think, 10 or 15 years, Japan's population will reduce by almost 30 million people. It's massive. I mean, that's the population of Saudi, gone in 30 years, right? So that's the macro. And then there's two other macro issues in gaming. Gaming pricing, particularly for console and PC, has stayed the same for almost 15 years. So the cost of the game is the same. And we don't think about that. But milk is more expensive. Labor is more expensive. Your rent is more expensive. Your living is more expensive. So if you're a game studio, you're kind of fucked, right? You're paying people more money, right? and you have to higher cost because of inflation. Money's become basically inflated to hell, and you're not able to charge more. So even though the industry is sitting at 200 billion and kind of flattish to slightly declining, on real money terms, you're making maybe 20% or 30% less. Okay? So the gaming industry has been struggling for the last 3 years, really struggling. You look at the news, layoffs, people aren't buying consoles, all that stuff. So what does it mean? Investors aren't buying gaming stocks. There's no investments in studios. I'm not talking about Web3. In fact, Web3 was one of the few growth areas, but it's still small compared to the broader gaming industry. So what does it mean for gaming? Well, this is why we're bullish about gaming at the end of the year. And maybe now we have to go into next year too. There's two macro events that will change that, will change the sentiment. Because just like when last year, AI tokens were doing well, but the utility of AI tokens was marginal to gaming tokens. Why was it great? OpenAI, Perplexity, ChatGPT, everyone's talking about AI. So this year, we have Nintendo Switch 2 launching, which is one of the biggest console launches ever because of the fact that 8 years there has been no Nintendo new launch. And it's already sold out in pre-sales.
And actually, they tried to increase the price of game titles as well.
Well, they have. They've increased the prices. That's the other point. And the console itself is almost $500, which is actually a lot. So that's one indicator. Yep. And when people buy a console, on average, they purchase 12 to 15 new titles in the lifetime of it. So people buy more games. So that's kind of the good news. The second thing is, to your point, Mario Kart, the first game launching, is going for $90 physical and $80 digital. Now, games normally cost max around 60 something. Okay, that's a big inflation, and people go, "Oh my goodness!" But if you already sell out the Switch 2 on pre-sales, I mean, you're going to buy Mario Kart, right? So that gives license to every other game company to increase their prices. So we expect end of this year, gaming to have a boost because everyone's going to, if you're playing on Steam, expect the prices to go up by $10, $20. But that means as an industry is good because revenue is higher, opportunity is higher, and all that kind of stuff. And then the second thing about gaming, which will change the whole framework, is GTA. Unfortunately, the sad news is that we learned just this morning that GTA is delayed until May next year again. But it is the biggest gaming launch ever. And Take-Two, the company that owns Rockstar, who create GTA, have basically been making all their profits on GTA 5 for the last 11 years. Okay, so just kind of give you an idea of just how crazy that is. So this game is going to knock everything out of the park. It's also going to be the reason why people buy new consoles and will be a massive revival in terms of sentiment for gaming, which means that outside of gaming utility in Web3, which will grow because of TON and because of the ecosystem, but also because sentiment increases. So that's kind of how we think about gaming. But we also think on-chain gaming by the end of the year is going to hit, basically, tens of millions, if maybe not even 100 million through various activities. So we're generally bullish, but in terms of token prices, it's going to be about market sentiment, which we think will be achieved by the end of the year, and now following the next year, if GTA doesn't delay again.
Yeah, if, but there's a very big if, actually.
It's been 8 years already.
But yeah, fingers crossed. Actually, how many companies you said? 573?
73, yeah.
Wow, that's a big number. And actually, I want to talk to you about, it can sound a bit random, but you have so many companies in so many verticals. The current market sentiment around this trade war about China, US stuff, how does it affect you guys and all these companies that you have in your portfolio?
Yeah, so first of all, we're not terribly affected because the good thing is that crypto isn't tariffed. So if a Chinese dude sends Bitcoin to America, there's no tariffs. So that's kind of the good thing. But I think we do need to be mindful of some of the emerging geopolitics around it, which is why Dubai is a great spot, because you're kind of friends with everyone, right? And I think that's in a way what Hong Kong used to be and what Singapore is and what London is, right? These are the places that were hubs, that were kind of the neutral trading partner of those global centers. So that's kind of the opportunity for Dubai. But the stablecoin regulations, we have a stablecoin joint venture with Standard Chartered. And what's key on this one is it was licensed by the HKMA. The HKMA is our central bank. This makes it the only central bank licensed stablecoin in the world today, launching in probably Q3, but let's see. It's also Standard Chartered. And for those of you who don't know, Standard Chartered is a note issuing bank in Hong Kong. So that means a lot of people in the region will have trust in it. But because of the emerging stablecoin regulation in the US, you can imagine that every major bank is going to issue their own stablecoin. You know, whether it's JP Morgan coin, Goldman Sachs, Citibank, they're all going to have some kind of coin. It's all stable to be used as a medium of exchange. So it's going to be competitive for like Tether and for Circle. But I think the key element is that that's also the reason they do this is because for America, stablecoins is a way in which you maintain your dollar hegemony. Because while Japan and China and all these countries are selling off their T-bills, who's buying the T-bills? It's going to be stablecoins. Meanwhile, the second largest bond market is China, right? And Hong Kong is the largest clearinghouse. 86% of what we call dim sum bonds, which is basically Chinese bonds, clear through Hong Kong. And in terms of renminbi, which is basically the Chinese currency, it's about 2+ trillion a day, right? That clears through Hong Kong. That, by the way, is the reason why the US sanctioned Hong Kong too. Hong Kong wasn't sanctioned before, it was like a free port. They did it not because of Hong Kong, they did it because it was a financial clearinghouse for China. So when you think about what's happening in the future, which will basically be divided essentially in a kind of bipolar way between, from a geopolitical standpoint, between somewhat US and somewhat China, China has to maintain relevant. They need to do stable coiny stuff. They need to do trade stuff. They need to make sure that the dollar would still be valuable, but it wouldn't be as weaponized as it is. Yeah. And so that means crypto, Web3, blockchain are all important tech, and expect them to come up with different kind of stablecoins. So I do expect more national type stablecoins, not CBDCs, to emerge through Hong Kong. China might have a CBDC, but it would interact essentially with a stablecoin in Hong Kong, and it's about renminbi flows. So the stablecoin wars, as it were, that are emerging have a geopolitical flavor in them that is probably not spoken about, but very much is relevant. And it also, when you think about things like Apple, right, and you think about payment systems, they're going to be the ways that people flow through money, and especially now, both in Europe and the US have basically cracked open payment systems. You're going to basically just transact freely with stablecoins and transactions without being under the yoke of this and don't have to pay the 30%. So I see some major developments there.
I saw some news or maybe rumors that here probably there's going to be a stable coin pegged to AED as well, to dirhams. So maybe that's going to be the case here as well, not only in
correct. I expect many countries around the world to start doing stablecoins. Yep. Ironically, I think EU will be pretty behind just because it's Europe. And they have certain views around this.
Is there anything where they are ahead of something?
I mean, they were slightly ahead of America with Mika before Trump administration, but at this point, I think they've fallen behind as well. And I think this is the broader thing. If we agree that capitalism is the future, then we need to be in places where capitalism is allowed to thrive, right? So Dubai is great for that. Hong Kong is great for that. The Trump America is great for that. The last America, maybe not so much, right? But Europe has a very uneasy relationship with capitalism. And you know, I grew up in Austria, and we can't talk about money, right? It's kind of like a dirty thing. And that's hard, right? Because you can't openly talk about it. I mean, I don't know how many of you are from Europe. Yeah, okay, fine. You probably know what I'm talking about. You know, you hang out with your friends from school or high school. You don't talk about real estate prices. You don't talk about stock market, right? That would be weird. But if you're in Dubai, you probably talk about real estate prices all the time and about token prices and about this. And it's not considered rude or weird. And if you're successful in business, you're celebrated. Whereas in some other places, you're like, what did you do wrong? Or what crime did you commit, so to speak, right? And so that notion makes this place welcoming for entrepreneurs. That's why it's a hub. And I think that's the opportunity. And I think Dubai is a perfect example of how it captured that energy.
Yeah, 100%. Who's actually based in Dubai? I'm just wondering. Who's here only for like Token 2049 and like side events? Okay. 60 to 40 to 60, I would say. Okay, the next question, we are almost out of time, so I just want to put it this way. You said there was a conference about like NFT, like 2017 or when?
It was 2018.
18, okay. And there were just like 50 people. Like, is there?
I think 200 registered, but 50 showed up, something like that.
A good conversion still. Is there anything which excites you now the same as it was exciting for you? I mean, as NFTs were exciting for you back in 2018.
Yeah. So first, NFTs are definitely not dead, right? And you know, when you think about what's happening with ton stickers and that kind of stuff, to me, they're just versions of NFTs, right? And eventually, they'll emerge that. But also, NFTs are really the cultural status item of the digital world. So when you have made money, whether it's physical or digital, you want to elevate your cultural and symbolic status. And we do this by buying nice watches, or living in a new house, or buying a car, or wearing clothes. Whatever your generation is, you have a translation of a status object that means something to you. And in Web3 is a form of NFTs. CryptoPunks is probably on top, and then other things that come sort of correlate to that, and they make you join a part of that membership, right? And to me, the membership of an NFT, which is why we continue to be excited about, isn't just, hey, look at this asset and you have this asset too. It's like it's a club membership. Yep. And you know, when you go to, let's say like London, and you say, oh, I live in Chelsea, I don't know who you are, but immediately I have an idea of kind of who you are, right? And, or, you know, I went to Harvard University, or, okay, oh, you're kind of this club, right? So NFTs represent that, maybe in a more commercial manner, and develop that. So I see that as, you know, where it's going to go. And cultural assets are the underpinning of our society. So as more wealth is made in Web3, those asset classes will naturally rise. But the other thing I'm super excited about, which is, you know, and again, when we started looking at gaming and metaverse in 2017, 2018, it was not an industry. It really took 3 years, like 21, to really emerge into a force and remain one. We're particularly excited about education. Education is not sexy at all. Yep. I think most of you probably just got out of education, you know, so you're like, oh my goodness, why am I doing here? But the numbers are impressive in the sense that it's about $5 to $6 trillion that we spend on education every year. And with Open Campus, we most recently we put $10 million into a loan program for for DeFi student loans. Now, that's something we like a lot, because if you are a student, you need a loan, you get a wallet, you repay through that wallet, you're in for crypto for life. Not only that, with the wallet, you have an ability to receive airdrops, so you can make some money. DeFi primitives allow better yield, which means the interest rate is lower for the students. Like all these benefits, all the benefits of crypto, faster, cheaper, better, basically come into play, not just with transactions and transition, but also with things like loans. We've financed about 1 million students through the 2 platforms, Philippines, Indonesia. The loans are small. But you can kind of see how that would be an evolution and bring people on chain. And these are the numbers that I think will speak to everyone here, regardless of the fact that it might not sound super sexy, but why we want to invest in this, which is student loans globally is a $3 trillion market. About 1.7 is America, the rest is the rest of the world. And again, in Dubai, you don't have to worry about this because the government pays for everything. But most people aren't like Dubai. And if you can take 10% of student loans on chain, because it's better, faster, cheaper, that's $300 billion. That's 3 times the amount of DeFi TVL today. So it's 2 demonstrations. One, 100 billion of TVL is great, but it shows actually just how small we still are and how early we are, but also how easy it could be. Again, I'm not saying it's easy, but how easy it could be to bring all that value on chain. Because once you have that TVL on chain, you can build all these new primitives. You could do student loan collateral, you could do new finance products, you could do new services. All of this emerges when you suddenly have a few $100 billion more of TVL on chain. So that is kind of you know, why we're excited about it. But this is the long game. And the other thing that, you know, I also want to sort of point out that while we should all be building games and ecosystems and so on, maybe meme coins too, and whatever is fun and interesting, we do need narratives that speak to everyone. So all of you here are very financially literate. You know, you're also in Dubai. You understand money. You're not afraid of it. You are also people who understand value. You can do good things, but you can invest, and you know the difference between a meme coin and an investment and something long term. Most people don't know that. You are the single-digit percentage. You're the wealth class of people who know money. Most of the world does not know money. My mom doesn't know money. Most of our parents don't know money unless they work in banking. They have a bank account, but they don't know money. So when you talk to them about crypto, it feels like Wall Street, like dark magic. So you need to be able to explain it to them in a way that means something to them. And artists was one way, but reason we like student loans is that if you say, hey, this is the way that students get cheaper loans, how can you not like that? And I think we need more of those narratives and more of those stories and more builders building those type of areas that we can support, so that it brings more people on board, because then it doesn't feel like it's just about money, because most people aren't thinking just about money, right? They think they want a purpose. And I think that's also what Web3 can offer.
Yeah, just want to add to both points actually. The first one to NFTs, because it's a cultural thing now. For example, on Telegram, just want to prove your point with an example. People actually started buying Telegram gifts with black background to make their background, make their profile with black background as well. Because if you pin a gift on Telegram, it changes the background of your profile. And now it's a kind of club of people with like black backgrounds, nothing else. They look for each other and say, hey, you also have a black background. Yeah, you are my bro, something like that. Yeah. So people actually started doing this, like out of nothing. Like nobody told them to do this. They just like black backgrounds and they want to own an NFT with a black background.
It's a network. They formed a network.
Yeah, exactly. That's the first thing. And second thing, what I actually want to recommend to people to get out of the bubble that you are in about crypto. You have obviously like parents, etc. But even if you go to, I don't know, have a new hobby, go start playing football, I don't know, skydiving, wherever, and start talking to people not in your bubble and not that you know now. I mean, new to you people, and try to talk to them about crypto. You're gonna be surprised.
Absolutely, and actually, even if you don't talk to them, you can just go to a different social network.
Yeah.
So if you step out of, so I'm on Blue Sky, right, as well, and if you go to Blue Sky, people think NFTs are dead and Web3 is gone.
Yeah.
I mean, it is literally a different universe. Like you just transport it into a completely different world. When you go on X, it's like, tokens, meme coins, pump, right? It's a totally different ecosystem. And in some ways, that means the world is becoming more bipolar, sure. On the other hand, though, we actually, because everyone in this room, you're basically Web3 missionaries. Yeah. You're still growing the space. So in a way, you should go on Blue Sky, and you should tell people. And yeah, people are going to ridicule us and whatever, but I would say, in our space, we have one of the highest tolerances for this kind of pain, because we've all been ridiculed for years and years. This is nothing, right? And in order to spread that, we should go to those places as well, and have the good conversations as to why it's meaningful.
Yeah. If you have some time, like 10 more minutes, I actually want to give an opportunity to ask your questions, guys. So if you have another mic, and if you have people who actually want to ask questions. Do you have another mic somewhere? The guy near the door was, I guess, the first one, at least the first one I saw, so. Yeah.
Hey, I was wondering, what kind of metrics are you looking for in a game to invest in the seed round right now?
So so there's two ways we can look at investing in the seed round. One, you could consider joining an accelerator. So we do fund different accelerators around the world. But I think most recently we did one, if you're in the UK, with Founders Fund and Coinbase. That's one way. Because if you're seed, sometimes you just have an idea. So you kind of don't have a metric. So it's kind of hard, right? Like, so the definition of seed typically is maybe MVP, but no users. Okay, so that's kind of one. And then the idea and the mechanics in the background. If you have a product, then the kind of things normally we would be looking for is a kind of retention, right? But in Web3, you also need to be able to articulate what your token strategy is. And that's actually harder, right? Because in Web3, you have two audiences. You have a token audience. By the way, the token audience doesn't have to be a fungible token. It could be a non-fungible token, but it's still a token, right? And how you think about that. So we do look for that. And then the second thing is, when you have a game mechanic, what are the metrics? What is the stickiness? Why do people come back? And that translates to the third part. Can you demonstrate a social connection? So I think I think when you talk about Web3 and the value, and this is not just for gaming, it's for everything, it's about building networked economies. These are network effects. The networks need to grow and stick. And there's a distinction to be made between viral effects and network effects. And so Ton is fantastic in building viral effects because you have a network that can really grow. But your application is the one that's responsible for holding them, right? Telegram and Ton can only give you the users, and you can show this growth. But it's the application, your product, that will show that there's stickiness related to that. There's an interesting stat in gaming that we use, Bartle's taxonomy, which is a way that we classify what kind of gamer type they are. And there's, on average, 4, but I would say there's a 5th one in Web3. So you have the killers, achievers, adventurers, and you have the socializers. The killer is usually roughly 1%. These are the psychopaths who like to kill everyone in the game. I'm sure you've encountered them if you play games. Then you have the adventurers, those who love to play games for fun and explore. The achievers, they want to get top rank, you know, leaderboard #1, that type. And then you have the social. And the social is, you know, people who play because their friends play. The social is 80% of every game, a vast majority. So Roblox is the biggest game in the world. Ask kids who play Roblox, why are you playing? Why? Because my friends are. But it is the adventurers and the achievers that bring people in the game. They're like the leaders, like the alphas of a community, right? I love this game, I talk about it, I bring them in. I'm an adventurer, I bring my friends in. And this is true for all social hierarchy. It's not just for games, right? But in Web3, we have one more thing, which is money. So we saw this with Axie Infinity. Money is another area that brings people into an ecosystem, but then they make friends. How many people bought an NFT because they wanted to make some money and suddenly they made friends and then they're part of the ecosystem? Axie Infinity doesn't have the millions of users it used to have, but it has about 300,000. And they're there because those 300,000 who played Axie are now friends and they're social. And so we look for the social metric and we look for what that glue is, or at least the idea behind it. If it's seed, then you have to think about it and let us know, you know, why you think it works. Yeah.
Thank you. Very nice.
I think we have time only for one more question, and I guess, yeah, this was the next.
Hi. Hello, Sid from, before I was working for Dogami, so it's also one of Animoca Brand. I was blockchain developer. So I just wanted to ask you a question about NFTs in general. So NFTs is a bit like assets that are released and doesn't require to reward people. But in terms of value, what do you think of NFT being the sole ways for brands to confirm that an asset was built by Nintendo, like Pokemon, and not just an AI generated by ChatGPT?
So I think you're talking about provenance, right? And I think NFTs are a good way to demonstrate provenance, but the value of an NFT is not just provenance. I mean, the blockchain can demonstrate provenance without making it tradable. What an NFT does is it turns it into a capital asset. So if it's something visual and artistic, whether it's AI generated like a Bored Ape or something that you draw, it becomes a capital asset because I can trade it with someone else, and there's a uniqueness that shows you're the artist. So that's one value of it. But if you want to just prove provenance, you can just do it on-chain. Now, in gaming items, it matters because a skin is a kind of NFT, even though it's not really an NFT in its construction. It has value because a market demonstrates it, and then it opens up a marketplace. So I do think there's a lot of potential around that. But we shouldn't only think of NFTs only in that construction. NFTs is a container, and you can encapsulate intellectual property, you can encapsulate revenue share. So I'll give you an example with TinyTab, which is also doing stuff with EDU and Open Campus. They created a platform where teachers basically represented their intellectual property that they make revenue from, like lessons, in the form of an NFT. And you know, a teacher in Venezuela might make $10 or $15 a year, very little money. But now, because it's an NFT, it becomes an IP right, which means it becomes a capital asset. That means someone can buy it, and if they're willing to do 10% yield, that asset that makes $15 a year is now worth 150. And that's the foundation of our wealth today, the fact that we have property rights. So it can do a lot more of that. And I just want to sort of point out that NFTs are also a great way to protect our intellectual property right. Intellectual property rights right now, like with AI, I need to prove that it's my data, and you can do it that way. But right now, it's very expensive to protect your IP right. Like if you want to copyright and trademark, you have to use a lawyer, there's cost. How do you prove it? And with an NFT, you can do it at a fraction of a cost. Today, I think the World Intellectual Property Organization estimates that I think it's $68 trillion is the value of our intellectual property in the world today. Something like almost half of American jobs are in the IP market. If you look at the top companies in the world, Google, Facebook, Apple, it doesn't matter. They're all IP companies. They're all IP companies. IP is the most valuable asset in the world, and it's entirely virtual. It's not physical. So it's basically like NFTs and like on-chain. So it's just the extension, and it broadens it. So it doesn't have to be valuable. It can make only $5 or $10, but it becomes a capital asset. And I see that as the future of basically expanding intellectual digital property rights throughout.
I think the same too. Thank you.
Yeah. I think that was the last question for today. And Yat, thank you very much for like all these amazing answers. And every time I talk to you, this is like a lot of insights, as I already said. So thanks for making it Friday evening. And I hope you guys enjoyed. Being honest, this is the first time I've heard this room being so silent.